Hello, welcome back to WINFXTRADING Trading YouTube channel, the only channel that has been optimized to make you rich trading the Forex synthetic market. In today's video, I'm gonna show you something that have made a lot of traders miss opportunity, because when you miss opportunity, it is very hard to get another opportunity, or you might actually make a wrong entry and you blow your account. So this video, you're gonna treat this problem. The topic is stop loss minimization stacking method in Forex synthetic market. Before I continue this video, if this is your first time of visiting my YouTube channel, do your best to subscribe and turn on the bell notification so you get notified each time I upload a new content, and try to like and refer your network to this channel so that YouTube push us to high level of audience. So these are the subtopics or the things we're gonna discuss: nose loop outputs, retracement monitoring / saturation, fixed SL on completed swing, maximum risk, serial risk allocation. So these are the things we are going to discuss, but this topic is more practical, so I'm going to the MT5 for the complete application of these terminologies. So that's good. This is 1 hour time frame. I just switched over to line frequency charts because it can help me to actually see the swing in the market, but then I will still need to go back to the candlestick to so that I will be able to see the real levels for stop loss and take profit placement. Okay, so we have to actually define a retracement. So the retracement is what is going to help us to not miss an opportunity, because every retracement is a source to an opportunity. So a retracement is the price direction that is against the main trend. A retracement is the price movement which is against the main trend. So it is an opposing trend to the main trend. So the main trend have increasing length output, or why the retracement, or which is a counter trend, have a shortened or a kind of a fraction of the main trend. It has a fraction of the main trend. The main trend is also called the impasse. So this is a length characteristic. So we have a movement, a price movement of this nature. So this type of movement has happened first of its kind. Like this is the first of its kind. In other words, there will be a differential in season, because previously this increase or this big length output is only seen during an uptrend movement. So we have seen it in the uptrend movement. So when such thing happen in opposite direction, it means that the trend have changed. So always look for change of trend, or look for overtrade conditions to know when market is going to change trend, because the changes in trend actually make a lot of people lose money. So this is a maximum length, this is a bigger length, which is also what we see during the uptrend movement based on differential seasons, because it is only when there is change in season that we have change in trend. Okay, so we would not believe that this market is downtrend, and then what we need a pullback to a key level. So the key level here is this neckline, major key level. So we need a pullback to major key level, not anyhow key level. It should be major, not minus. And so this is a strong neckline, which we can call a resistance, right? So right here, we allow the resistance to gradually move towards this zone. Okay, now the resistance, we'll allow the price action to gradually flow to this zone. The reason why we should allow the price action to flow to this zone is to minimize drawdown when you want to follow the trend. Okay, now before we continue this this retracement monitoring, we are going to go to candlestick domain to optimize the stop loss. Very important. If we can optimize the stop loss, then we can know the take profit as well. So we go to candlestick domain. Then when we head over to candlestick domain, you discover that there is high probability of getting a set SL here, because you really want to put your SL where price cannot reach. So if there are regions in the chart where there is a lot of rejections, definitely price cannot be able to reach those rejection zone, because it shows high strong opposing force. So your stop loss should be in area of high opposing forces to the main trend. Okay, so this is the safest place to put your stop loss with this strategy. And then if this is the safest place to put your stop loss, what are you looking for? You are heading back to the candlestick domain. I'm sorry, to the line frequency domain. Now, for every node output, you are going to place a trade. For every node output, whether in the direction of the retracement or against the retracement, you are putting a position, but then you have to define the retracement zone. So this, from here, the retracement zone starts from here and then goes to where it will end, right? So you are going to, what you need to do is you define a loop or a node. So every V, whether inverted or normal V that has been broken, is called a node or a loop. So for every time this V is broken, like you started seeing the line coming out of it with certain length, you are going to place a trade. Okay, you are going to place a trade based on your maximum risk. So you have, let's assume you have a $200 account. Now you are going to, this is where you want to enter, and then you are going to measure from here to your SL. So this will give you 3,340 pips. So your $200, you are going to calculate like how much positions are you going to make in this trade, how much trade are you going to place, like how many trade are you going to place. So when you know how many trade you are going to place, you're going to divide it. You are going to divide your capital, your maximum risk, with this number of trades. So it is good to have at least 3 trades, okay, from 3 to 4. So let's make it 5 trades. So you are going to divide your $200 by 5, and that will be $40. So each time we have an output, you measure the distance between the output. Once the output has a visible line outside the loop, you measure the distance to the stop loss. Then this value, you are going to divide the positional risk. You are going to divide it by the stop loss peak, which is this distance. So you divide it. Let's go to calculator, because this is 3,496, and so we are going to work on this. Right here you have $40 divided by 3,496. So you are going to use 0.01. Okay, you are going to use 0.01 on this trade, 0.011 on this trade. Okay, that's approximately 0.011. And then we are going to go back, and so you place the trade. Okay, you place the trade at this spot, and then you wait for another output to create while the retrace. This is done during the retracement part, and then you calculate again to your stop loss. That is 2,504. You will see that there will be a sudden rise in your loss size. So you are not dividing by this, so you are going to use 0.016, and then that's good. And now we come here, the market move and reach here, and you know that this zone is very, very important. This is this is a saturation zone. If price tap any boundary of this zone, whether the middle, whether the outside extreme boundaries, the upper and lower boundaries, we're taking a trade. Okay, so here we enter another trade, and then we measure. We are now having 1,767 So you divide 1767, you divide 40 by 80. So we now have 3 trades, and this time we are using 0.223, or you can call it 0.0223 or 0.02, okay, based on your approximation. Now we have 2 trades left. So how do we actually do this? We are now looking for outputs, right? So if the market stop going and interacting inside the saturation zone, then you also monitor the next events, and one of the events that might happen is change of character, change of trend, or the beginning of the impulse, and so the market break out of this node here. So you put another trade and then you measure. You see that there will be a sudden loss, like a kind of reduction in the loss size, and at this time around we're going to use 3,200, just approximately 3,200. So we are going to use 0.0125. So we have completed the trace, and we have completed the trade. Now we allow this market to run, okay? Different position, send stop loss, different position, send stop loss. Then we allow this trade to run, and be on the same time frame of entry. And what are you monitoring? You are monitoring the output of those nodes. You see that there is output on this node, and then the market move, right, and then get another output, okay? Just keep monitoring the market until there is a change in output. How do you know there is a change in output? Okay, you define a block. You are going to use block strategy. Define a completed block. So a completed block is the high and the low of a node. So you define it. If price go against it, then that means you should start taking your profit, okay? So another way to take your profit is to consider reversible key levels where price can reverse. I'm going to come to that later. So you see, this is another block. It tends to go out of this block or go against it, but it fails and it keep trading. So the next block is this block. So you can be monitoring this and be holding this trade, okay? And that's cool. If you feel like, okay, if a block has been broken, you can pretty much add position, but then you have to consider the safety of your trade. So you consider the zero energies levels in that block, which is pretty much the source from where it starts. So it's going to be the counter level, which is here, okay? Your SL will be here, and then maybe you can reinvest all your profit, but it is risky. The market can reverse against you. If you are just growing account, you don't need to be adding position when you are not expert in this type of stuff. But if you feel like you want to take risk, for every output you can place more trades, or you can locate resistance and support. That's another method. Locate a resistance and support. Like we are selling here, so this is a resistance, okay? This is a resistance, and so you can place a trade here while localizing your SL where price cannot react to, which is another resistance, okay? Because we are selling, and you can see when you use resistance method in the selling market or support method in a buying market, the loss size increases so fast, and when you use the block output, the loss size decreases. So it depends on what you want. The block output method is actually, or the node method is actually less risky but smaller loss size, while the resistance support methods are highly risky but very big loss size, okay? So that's good. The reason why it is risky, if price reaches resistance, you can decide to create a repo and liquidity sweep that will go and hit your stop loss and still go in your direction. So that's why but once a block is broken, you are sure that this market is heading somewhere. So that's why you should know the one that can favor you, but you can take risk and make it big if you wish, But if you know that you're tired of losing, you can follow the low risk method and get something out of the market. You can apply this in the forex market as well, in the gold market. Let's try to apply this in the forex market. This is day 1 hour time frame, and we'll keep studying the node output of this market. Just define a node of your choice, but make sure it is measured and it contains all the information in that regime, like within that region on the chart. So yeah, I can't just come here and select here. Okay, I can just come here and select here because it might be risky. But if I select a whole lot of zone, it might simplify my analysis. But whatever, you can do whatever you want and still make it with this method, but try to consider some stuff in the market. So I can also use this. The reason why I will use this is because I have already studied the regime or the region and what is happening in the market. I discovered that price have probability to reach here. So why am I afraid? I can even take my profit at those levels. But the reason why another person might decide to do it like this is because it will be like, if I do this, I will filter these problems that used to happen here. I will be able to trade outside here, and I believe that the market will not go back here. But this is risky. That's why, like, this is not the way it usually is. Like, the way I say it, it is not as easy as you think. The reason is because block used or node used to create fake ads. So most output from nodes will become an input to the node, and this will lead to blowing of account. And one of the ways to solve this problem is to leverage our signals. I think we need to use our signal because we know how to do this thing the right way, and that's why our signal cannot lose. So why should you be beating around the bush when you have a resource for your wealth? So you have to take action on that signal service decision, or you can actually enroll for our courses to learn what we do, and you can actually invest with us on account management. We have different type of management: account pool and individual account management, many more coming depending on what you have and who you are. So it's working on good. You can see it's pretty much working on good, as simple as it is. You can see this. It's left for you to work at the lot size, because when you are working at the lot size on the forex market, it's pretty much involve p values and all of that. Very important. But you can check more about how to calculate lot size. Okay, so you see it's working, that you can actually wait for a retracement. You can actually wait for a retracement. Like what I'm teaching here is a retracement. Like what I'm teaching here is how to get the opportunity the retracement is giving to you. Okay, so you see a pullback, then on this output you enter a buy signal, because you are going to trade the impulse, which is the buy. So you enter a buy signal, then you have another output here, you enter a buy signal, and then the impulse start, we have output, you enter a buy signal. You define your retracement zone, okay, from where it starts to where it might end. Once price have left that zone, you stop adding position. You now allow the position you have added to grow, to convert to profit. When they convert to profit, you can look for available blocks, look for your support, since we are buying, and then either you use support method to enter more trade by reinvesting your profits and your capital, or you use block output method, because on this output you can place a trade, your SL there, or you look for a strong support, which is this one, that is a support here. You place a trade, your SL, on another support. So you enter somewhere, this is a support, you enter somewhere here, this is another support here, or just below that support zone. So we have, it depends on what works for you. You can place it below here to maximize profits, you remember you are investing everything, because this is stacking method. You are investing everything, so it's more of your investment. So that's why I prefer using another support, another nearest support. But most time, if you cannot get another nearest support, just take the risk, place it just below the support. The same thing with resistance. That's good. So thank you, and bye for now.